fellow traders, 'tis I, the Rumpled One, coming to you on Monday, October the 20th, the year's 2025. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. As always, have risk management in place so you don't lose more than you're willing to lose while you are trading. So we get right into it. We look at the week. We're just a little over a pip below the weekly open, 21 off the high, 22 off the low, and the euro pound has not filled the open gap. We zoom out to the monthly. We're 22 pips below that monthly open, and 105 off the high and 174 off the low. And just so let traders know, this 134.22 area, it's really been a very interesting area. You can look here and see we've had a just a lot of price action right along this area, right around here. So I'm not really sure the why or the how, but I just know what's been happening around the 34.22 level. We're putting in the opening range for the week. We're below the opening range for the month, and we're still above the opening range for the year. And so far for the year, we're 910 pips above that yearly open. We are 369 off the yearly high and 1321 off the yearly low. We are above the inside bar range on the daily from 5 days ago. We're within the inside bar range of the weekly from 3 weeks ago. And there's not that much inside bar action happening according to the dashboard. For the range, only 43 pips today. Let's see who's leading it. The beast, the pound yen's leading the pip count at 139. And we're just crossed that weekly open to the downside not too long ago. So you can see here there's been a lot of crisscrossing, and that weekly opens just 1 pip above that 134.22 line. And I was talking to Walmall about that line, and on his chart it's a Fibonacci retrace from about 2 or 3 years ago when he put his lines on the chart. And I can't remember if mine was a H4 high, low, open or close, or a weekly or a daily. I just know I put some lines out there on my chart on my phone for reference, and these lines have definitely been important, or at least there's a lot of price action around them. But you know, the funny thing is, traders, it's all a story that we tell ourselves, because somebody else could have put a line at 21 and somebody else could have put a line at 23 or 24. You know, the psychological's at 25. And then when you look back over the past year or two or month or two, doesn't matter, you'll see action around that line. And it's just, we'll just tell ourselves these stories. But the funny thing is that, you know, once you're in a trade, all you can do is make sure you don't lose more than you're willing to lose. I mean, that's really it. And you just have to realize that this is just all stories that we tell ourselves. You know, we I don't know if it's really make-believe, but it's amazing the stories, you know, that traders will tell themselves and the length they will go to complicate matters. But sure, there's some things that have an edge where, like the buy zone, for example, chances are, the range is going to be bigger than the distance from here to here. And once again, it's proven it. So, price can't stay. It's just, based on statistics, it's just not going to, price isn't going to stay between these two lines. It's going to bust out. So here, it broke out to the high, then it broke out to the low, broke out to the high, broke out to the low, and now it's in between again. Now, it doesn't have to break out anymore because it's already done the breakout today. But, you could have easily taken this trade here and it could have been a loser and then turn around, right around, you could have made it back. Or you could have taken a trade here, not taken profit when market gave it to you, and you could have went and stopped out. So, a lot of people say, you see, yeah, that's why we don't like that, because you can get whipsawed. Well, if you don't take, the few pip profits when you can, yeah, you could get whipsawed. It's just like you could take the trade across the weekly open. If you're not willing to say, hey, I'm up 3 pips and it's just pulled back to 1 pip, maybe I should consider getting out. What's the price action telling me on a lower time frame chart? How do I read that? And that will come from experience. And just saying, you know what? If I can pop it for 2 pips every time I get in, you could be happy. And because trading isn't just it's not just a 1 or 2 trade endeavor. You're going to be doing this for days, weeks, months, years. And the whole idea is just to, come out with a profit. And you can see the range is too low to be taking rat trades. And so when you see that, it's like, nope, it's off. Okay, Bambino Flex Indicator said to go short. Pivot trading plan said near the pivot is a short near R1, and it looks like we've taken that short at the pivot a couple of times. And let's see, that pivot point looks like it was at 34.29. We have taken it out on the daily. We haven't quite hit the weekly pivot down at 33.81. Missed it by 18 pips, but we're just starting the week. And the month pivot has been taken out. In and out of the upper wick zone and lower wick zone today. And notice we're down to 78%. Usually this is around 70. So, but it was at 80 or 81. So it's starting to go back to that average. Now, remember, we're looking at 60 days worth of data. So once again, it's highly unlikely that price is going to close in a wick zone. But when you have huge wick zones like this, it could close in a wick zone today. And so with only 43 pips, that's 0 percentile. We haven't broken out at a previous high or low, so nothing to be gleaned from that. Price action, you can see here, we're pretty much, looks like we're almost range bound. We put in a daily low, an hour or 2 ago. Put in that daily high. And once again, it just seems to be range bound. And on the M30, you can see it doesn't seem like there's been much price action. We have a couple of pairs or a couple of bars that were over 10 pips, but in the last 5 bars, it was 2 out of 5, which is telling me there's just not much volatility out there today. Looking at M1, we're coming off a 3 ball on the low side here. We had a lowest high trigger. It happened once. It's happening again. Okay. The year-to-date percentage return right now, if you bought at the open, 7.31. I don't think we pushed the range at all. And look at the ATR percent, still at 59. Well, we still have a couple of weeks to go, so we could push it. Okay, and the range by month, only 279. So looks like we need to get a move on. And let's just take a look at the day. Price inside the lower wick zone. Price turning down. Seller strong control. Lower high, higher low inside bar. So you see here we just put in a new 3 ball. Price is still heading down. And if you look here, you can see there's this big imbalance here. Price still heading down. $17 pips off the low at the moment. We just started a new M30. Cross below indicator 2 on M30. Let's see, this bar has not been covered, so the open is at 13. We're within 1 pip of that. Let's see what happens. And just looking left, you can see here, this looks like some consolidation. Notice here, it did not actually cross above that line. So you have to wait. And that's the question. If you jump the gun, sometimes you regret it. So that's why you have to stick with the plan. Don't be anxious. Don't have that FOMO. So, fellow traders, I hope you all had a fun and safe weekend. And for those of you, I guess, in the upper hemisphere, there's supposed to be a meteor shower if anybody's interested tonight. Meteor shower. So, fellow traders, when you're trading, I want you to always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.